Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Tom Kottler, who's a co-founder and CEO of HealthPrize Technologies. We're going to look at pharmaceutical companies' untapped profit resource. Tom, thank you so much for joining us at MarketSite. And it kind of seems a bit ironic to think about the pharma industry not recognizing a profit stream. Tell us about that.
So patients not taking their medications, called medication non-adherence, is a huge global problem. And not just for the pharmaceutical industry, who we estimate within a report we did with Capgemini loses $637 billion a year from patients who don't take chronic medications. But this is a huge problem for the health system generally. NEHI estimated it costs $290 billion a year to the healthcare system. It's the sixth leading cause of death in the United States. It's generally a huge problem. But for the pharmaceutical industry, it is a cause of massive losses of potential revenue.
So what do you do to make up for that revenue?
Well, if you're a pharma company, you've always done, I guess, raise prices, but there's increasing pressure on that. But as you'll see in the news recently, pharmaceutical companies continue to raise prices, even though there's such downward pressure on that from the government and other places. So, if pharma's business model has always had the doctor as the consumer, because you can't get a patient to take their drug without a physician writing the script. That's always been their focus. But leaving $637 billion on the table every year seems foolish.
So even if you have a slight increase of adherence, that could make a big difference.
Huge. And in fact, we worked with Credit Suisse to do a research note that they just came out with in the end of March to calculate how much this is an earnings per share, as well as a valuation issue for pharma. I'll just give you one quick example. They looked at 7 of the companies that they cover. Lilly, for example, on average could increase their earnings per share by 21.8% over the next 7 years with a focus on adherence without getting huge lifts, and a DCF valuation lift of 22.7%. So huge numbers, absolutely no reason for companies like Lilly and other major pharmaceutical companies not to start focusing on adherence at a corporate level.
But how are they supposed to get patients to adhere to their prescription plans?
Well, there are lots of ways to do it, and there are lots of reasons that patients don't adhere. There's no magic bullet. What we do at HealthPrize Technologies works really well, but it's not a magic bullet. You'd have to take a wide, systematic, corporate level approach. And the problem to date is they've left these things to the brand to take tactical approaches to what is a strategic problem. And that's why it really hasn't worked very well to date.
And how does HealthPrize help the companies improve adherence numbers?
So we have a platform, a digital platform that uses gamification, ideas from behavioral economics, and proven concepts from loyalty marketing to get patients to engage with the drug, understand why it's valuable to them, and get them to stay on therapy. The problem is not cost or forgetfulness. That's how we've always looked at the non-adherence problem. It's really a value problem, right? Patients don't value their medication and they go off of it. And this is not just patients, like a middle-aged guy like myself, not taking a branded statin. Cancer patients, transplant patients, glaucoma patients blind in one eye don't put their drugs in the one eye that still works. The number one reason that transplant patients reject their transplanted organs is not taking their immunosuppressants. So it's a shocking problem about human psychology. It's really not about cost or forgetfulness. So we play on that a lot and get patients to learn to do the right thing for themselves.
All right. Well, thank you very much for joining us at MarketSite today. It's a fascinating story.
Thanks. My pleasure.
Right. And thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.